In this video, I told you that CBK had reopened 3 treasury bonds this month, even though we were expecting, the treasury had given an indication that in the month of November, they will be auctioning a switchboard. A switchboard, like I had told you, is a bond that you switch one bond or you swap one bond for another bond. It is sold to the bond holders. But instead of the switchboard which we were anticipating, we have seen CBK reopening 3 treasury bonds. And I have already reviewed one of these bonds in the other video that I've told you about. Now, in this video, I'm specifically going to be reviewing or going to be sharing with you the salient features for the second bond which has been opened for auction in November. That is the FXD1 2023-10. But first, please press the subscribe button on your screen before you forget again. I know you keep forgetting. Bonyeza hiyo subscribe button kwa screen yako. And to those who already subscribed, thank you so much for your support. Like the video and share the video. Back to the bond. 2023-10 means that the first point it was issued in the year 2023, FXD1 2023, and it was a 10-year paper. That is the last digit, 10. So FXD1 2023-10 was first issued in 2023. It was issued for 10 years. Therefore, it is going to run for the remaining period of that 10 year. In other words, if you are to invest in that paper now, even though it's a 10-year paper, your paper or your investment will mature in 8.3 years. So in the next 8.3 years, if you are to invest 1 million now, CBK will be sending you back your 1 million in the next 8.3 years. During the 8.3 years remaining tenor of that paper, utakuwa unakula 2 coupons. You'll just be receiving your coupons. And what's the minimum? How much must you have to invest in this paper? 50,000 shillings. The least amount you need to invest in this paper is 50,000 shillings. Now, in this paper, just like every other papers, we have competitive bids and non-competitive bids. The competitive bids are the bids that you tell CBK the amount of interest you'd like them to pay you. You see, this paper carries with it a coupon rate of 14.15%. If you had 2 million and above, in other words, if you're investing 2 million and above, 3 million, 10 million, 100 million, or even 2 million, 2.5 itself, you can put a bid. As you're putting a bid, you can give a rate that you expect CBK to pay you at. For instance, you can give, even though it carries with it a coupon of 14.15%, you can be telling CBK, pay me at 16% or pay me at 15%. And it will be at CBK's sole discretion to decide whether to accept your bid rate or to reject it. If it's rejected, there's no appeal unless there is a tap sale which has been reopened. Now, this paper is taxed at 10%. Just like the bond we reviewed yesterday, this is taxed at 10%. Whereas the other paper, the 2024 paper, you had to put your bid by 6th November. This 2023 paper, your bid must be with CBK. You must bid by 11th November. I'm not sure why there's a difference in the deadline for bidding, but I would imagine in this November there's some coupon that some people will be receiving. The other papers where they have their coupons being paid in November, I would imagine it has been tired to match the payments of those specific coupons. Or maybe there are other bonds which are maturing this month, next month in November. What I'm sure of is that there are coupons which are being paid out in November. I'm not very sure of the dates because, of course, these are coupons for different bonds or different papers, but I'll imagine that it has been staggered like that. They might have staggered the bid date or the bid closure date, so they stagger the receipt of the payments of those papers, the receipt of the payments of our investment, your investment, and my investment, so they're able to settle whichever coupons are due for payment or whichever bonds, if any, that is maturing in November and is due for payment. But the deadline for bidding for this paper, the FXD1 2023-10, is on 11th November. What would make me want to invest in this paper, even though it carries with it a lower rate of 14.15%, which translates to a net coupon of 12.7% against the other paper I told you about in my earlier video, which carried with it a net coupon of 14.4%. It's the coupon payment dates, because the tenor is more or less the same. It's the coupon payment dates. This paper, the 2023 paper, its coupon is being paid in February and August. The earlier paper had its coupon being paid in March and September. So if you're working towards having your cash flow, if you're working towards generating a monthly revenue stream from your investments in bonds, I told you can use bonds to pay your rent, yeah? So if you're working towards generating a monthly cash flow, laddering your bonds so that every month you have a paper or you have a coupon you're receiving from CBK, and you already have your March and September sufficiently covered, then you can opt to take up this paper. Given that it's slightly below the interest rates, the prevailing interest rates, just slightly below the prevailing interest rates. The T-bill is at 15.4% thereabout, yeah? So this one is about 1% below the prevailing interest rates. It's likely to be sold at a discount. So that discount sale is an instant capital gain for the investors, because at the end of your investment, if you invest 100 million, you are likely to pay 99 or 98 million and something, yeah? CBK will advise, and that difference in your bid amount and the actual amount that you remit to CBK is your capital gain. So the big investors might pick this paper because they'll be offloading it in that secondary market anyways. I know rates will be coming down to probably about 10%. By the way, the paper which Treasury was going to, the source bond that the Treasury had initially identified to be auctioned or to be switched next month, November, has a coupon rate of 10%. So that is a clear indication of the destination of the interest rates, where CBK or the Treasury intends the rate to hit. The source bond, the bonds which the Treasury had indicated that were going to be switched for the new bond, has a coupon rate of 10%. So that gives me an indication of where the Treasury foresees or intends the interest rates to be at or stabilize at, okay? This rate is still at 14.15%. So if you are an investor, a regular investor in these bonds, I will pick it. I will pick this paper knowing very well that in the next couple of months, I'll be able to offload. The rates will have come to 10%, and I'll be able to offload this paper at a higher paper. In other words, if I pick it worth 1 million, in the next couple of months, I could sell it at 1.1 million or 1.2 million. And that difference is my capital gain. Now, another thing you need to know about this paper is that given that rates, coupons are paid in the month of February and the month of August, it carries with it an accrued interest. It carries with it an accrued interest of 3.5378%. So, if you are to invest 100 shillings in this paper, you will need to pay CBK 3.537. You need to be paying CBK 3.5378 shillings. So if you're investing 100,000 shillings in this paper, you will need to pay CBK accrued interest of 353 shillings and 78 cents. This accrued interest is the interest which has been accrued from August 2024 up to the time you'll be remitting your money to CBK. So it's actually money that it's your own money. It's not an expense. Accrued interest is not an expense. This is your own money. This is money that CBK will be paying you back next year in February. Let me break it down to you further. This paper was first auctioned in 2023. I have told you that. Now, assuming I had invested, actually have this paper, assuming I had invested in this paper last year, when it was first auctioned last year, I was paid a coupon in August. That was the last coupon payment date. Coupons are paid in February and August, yeah? So this year, August, I received a coupon from this paper, right? Now, next year, February, I am expecting another coupon, which my interest has been accruing since 2023 August all the way to February next year. Now, you are entering this paper in November after myself and other investors in this paper have already been accruing interest from August of 2024, accruing interest daily up to November, and then once we have accrued some interest, ndio sasa wewe unaingia kwa hii bond, ndio sasa wewe unatumia CBK pesa yako, and then we continue accruing, you and us continue accruing interest up to February. Do you think it will be fair for us who had invested earlier and you who is just giving CBK your money in November to be paid the same amount next year, February? Certainly not. Now, to compensate that lapse in time, you will be sending to CBK the amount we have been accruing from August up to when you remit your money to CBK, and then in February next year, CBK will pay you and pay us the same amount. Fixed, the same amount. Even if coupons were to be due in December of this year, assuming, just for argument's sake, yeah, CBK will still be paying us the same amount, even though you had just invested for 1 month. You'll be receiving the entire 6 months coupon. But money is not for free. So to compensate that amount, you always have to send to CBK. CBK will always ask you to give them in advance the interest accrued from the last coupon payment date up to the date you are remitting your money. And then on the coupon payment date, they will pay you the full coupon amount. So interest accrued on bonds investment is never an expense to you, the investor. Now, just like the other paper, this bond is not having a redemption structure. So every investment, you will receive them at the maturity. And it matures in the year 2033 because it's a 10-year paper and it was issued in 2023. So 10 years from 2023 is 2033. Have you subscribed to the channel? Please press the subscribe button.